Hello, YouTube and their crypto enthusiasts, and welcome to another episode of Equibit Trading. Today, I am going to tell you when the Bitcoin bubble is going to burst. But don't worry, as not today. We are getting a bounce here from the 50 moving average, and also we are breaking above the 20 moving average. Futures expired on Friday. So from here on, it's very looking very bullish, especially if we can close above that line. Super bullish. But that's not really what we're talking about today. Today, we are talking about when this bubble is going to burst. And in earlier videos, we have already established the price targets of 90,000, which is 1,000% gain in this bull run. And we're on track of meeting that target. Very much so. These are my magical Bitcoin lines. We're going to have a look at those as well. So we have established the time frames here from history, from the other bull runs. This was the length of the 2017 bull run. So that should take us to a top around 18th of October. And if we have a more conservative approach, we look at the length of the 2013 bull run, which seems more like this one than the current one. So that would take us to June of this summer, basically middle of this summer. We do have some bullish things happening for Bitcoin, and that is like PayPal is going to make it possible to purchase Bitcoin all over the world. We can have a look at my magical lines for Bitcoin. I think we need to go to the monthly, or we can zoom out a little bit. This red line is what used to be support during since 2012 all the way across the bull run. When the bull run ended, it acted as support all the way until the 2017 bull run. We came off the bull run here and we broke that support. And from that point on, this acted as resistance. And we see that in the 2019 bubble, it acted as resistance. So that is the magical Bitcoin line on the as we have resistance now. So if we were to pump up to 80K, I think is roughly sitting around there now. So yeah, if we're really in a bull flag now, and we break this bull flag here, from here up here, this will take us to 70K. So then we're not too far off resistance there. I would think it would be too much to ask for it to break this resistance. And we also have resistance down here as support. So we can clearly see if we zoom back out. But this is not really what we're here to talk about today. We can see this acted as resistance for the bear market here, and then we used it as support in the previous bull run of 2017, and then again as support as we came off and turned around and bottomed it out and went back up. So yeah, keep these levels in mind. I hope we don't go back to this now, but it would take some time, especially if we first go to the end of this bull run, which we said were around this summer, maybe fall. So that would take us to a minimum price of, yeah, I have a hard time seeing it dropping below 20,000. Because it would take some time for the market to come all the way down here. So I don't think we're going to hit this line until maybe early next year, and then we're already way above 20,000. So I would say that the low would probably be um, when we go into the bear market around 30,000. Um, so now let's go to the fun stuff, where we try to determine if Bitcoin is in a bubble or not. For me, what determine a bubble is if there is high leverage, if there is the expectation of a lot of gains to be made, and we can clearly see here on the Bybit exchange that leverage is almost at all-time high. Well, it is at an all-time high at 2.65. So this means that the average user is um, betting 2.6 more times than you actually have in Bitcoin. But when we look at the other exchange, like all exchanges, we see that we are sort of in a mid-range. So on this one, it don't really look that bad. But nevertheless, I think there is a little bit of a Bitcoin mania, but there are a lot of bullish news. But at some point, the bubble is going to burst, especially if something make it burst. So let's have a look at the 10-year bond yield. Basically, if we break this red line here, then Bitcoin is in trouble. And to understand why, we need to understand a little bit about how capital flow from one asset to another. Because right now, Bitcoin is behaving like a tech stock, and it's not going to be a hedge against ordinary inflation. It will be a hedge against stagflation and the continuously printing of money and high unemployment and low growth in the economy. And to understand why it is like this is when the economy do badly, then people are going to try to put their money into businesses that is going to do well in the future. So that is why we see this tech bubble. And a lot of capital will then flow out from value stocks because companies like AT&T, IBM, and all these blue chip stocks, they're not really making that much money now because it's expected that consumers will save their money and that the velocity of money will go down. So what people do is they look into the future and they say, all right, these new technologies, they are exciting. Let's buy that. And they will do that when the interest rate is low. So they will very often borrow money and buy these stocks. And that is why we see these tech stocks are going to the moon. That will all end if we cross this line, and especially if we then have to cross this line. So most likely the Fed is going to come in and buy government bonds if we get close here to drive the interest rate down. Because if the price of the bond go up, which it will do if the Fed come in to buy it, to buy supply and demand, the interest rate on the yield, 10-year, or the yield will go down. So the 10-year yield will go down if the Fed start buying bonds. So let's make another line up here, and we call this area for the area where we thrive. When interest rates are below 2%, Bitcoin and tech stock, they are thriving and having a good time. In this area here, we are in survival mode. This is where it gets kind of ugly. There will be a dip in tech stock and in Bitcoin because they are very correlated right now. as Bitcoin have gone up so much that people believe it's in a bubble. I'm still very bullish on Bitcoin very long term, and think it will eventually be a hedge against inflation caused by improvements in the economy, but not on the short term. On the short term, I think Bitcoin is a good hedge against declining GDP, high unemployment, and a worsening economy. If we go above this line here, it's absolutely game over for Bitcoin and tech stocks. And we will see capital flow from tech stocks into value stocks like Berkshire Hathaway, and other like AT&T, EBM, and all these kind of companies that makes a solid profit and pays a good dividend. And consumer uh, retail and all this, that will benefit from a higher interest rate caused by a bettering economy. And if that happened, Bitcoin will fall. And funny enough, the reason for this is if this goes up, that will cause more inflation. And most people see Bitcoin as a hedge against inflation, but it will not be a hedge against inflation caused by a bettering in the economy. So keep that in mind because it's very important to understand the difference between the two types of inflation that we can have. One is caused by increasing the money supply. The other is caused by low unemployment and more money chasing goods and services. So it's two very, very different things. Because when the economy is doing better, then those established companies will have an easier time making profit. And if you can gain about 7 to 10% a year, with quite low interest rates up here, um, and that is less volatile, and you can be sure that those company will keep delivering and not fluctuate much in price. Many people would rather take that instead of being invested in something that might be something in the future. People like a sure thing, so they will most definitely go from tech stocks and Bitcoin into value stocks. And we see this kind of happening already. We're going to look at first the dotcom crash, which in some ways can be a little bit similar to what we see today with the tech stock bubble and Bitcoin bubble. Well, Bitcoin is not really in a bubble because long term Bitcoin will keep rising in price, but we're just going up a little bit fast, a little bit much too fast, and then we're kind of making these little bubble outside of our trend lines. We will come down to them at some point, and we will continue rising in an astonishing speed, but not at 100% a month, or like 50% a month. So let's look at the 2000 dot-com bubble, and it's not a completely similar situation, but a little bit nevertheless, because we see here we have interest rates at these candles here, and then we have the tech stocks in orange, and then we have Berkshire Hathaway, which is like a conglomerate of value stocks from the most famous value stock investor of all time, Warren Buffett. So what we can see happening in 1999 is that interest rates fall to the low of the decade. They were quite high during the 90s, and then they came down to about 4%. And what that made people think that they lowered their expectations for inflation. So they also lowered their gains from the value stock, because um, these will also, I mean, if you're selling something, the price of what you're selling will also go up with inflation. So what happened was that people was probably taking out loans to buy these new exciting internet stocks, and that drove capital from the value stocks into the dot-com bubble. And then it broke out, or crashed here when interest rates were risen to about 7%. It's not completely the same as what's happening now, because in 1999, I think there was about 4% GDP growth, which was very, very good. So it's not the same thing, but it's a little bit of the same mentality, that you want to bet on something that can be a lot in the future, because you see, that your gains in the value stocks are probably not going to protect you against inflation. But yeah, in many ways it was also different. But as you can see, um, the tech stock really shot above the value stocks. And then we can have a look at where we are now, because for a long time value was outperforming tech, in the 2000s and even beyond. And then we came to the, yeah, here was the 2008 financial crisis. Yeah, both value and tech got hurt by that. So if we move to where we are now, we can clearly see that tech stocks are quite high valued compared to value stock. This have lately started to turn a little bit around, and we can see value stocks are now climbing with the climbing interest rate, and tech stocks have had a little bit of a dip. I think we will be okay as long as we don't go into this box and that we don't break this line. In this box here, we might have an opportunity to buy the dip, especially if we go up here, there's a dip, and we come down and we go beneath this line again. Then I'm pretty sure I will go in on tech stocks like Tesla and other tech stocks, and we can use this. This is the composite Nasdaq index. These are the tech stocks. We can use this as an indicator or early warning for Bitcoin as well, because this will probably fall before Bitcoin, and you can see it's sort of correlated. So that will be an early indicator that those stocks that have the highest price per earnings, those will fall before Bitcoin. I'm pretty sure of that. So keep a track of this IXIC, and that can be an early warning to what will happen with Bitcoin as well. So here I have the Bitcoin price and the Nasdaq Composite overlain. As you can see, there are quite a lot of correlation between them. It can be hard to do like this when Bitcoin is in a bubble, so it's better to just have it on two separate screens and try to compare them that way. This is because the volatility is completely different, and Bitcoin have gone up 1,000%. So that, but maybe there's even better indexes than this. If you can find something which consists of the most highly valued tech stocks out there, I think that is going to give an even better indicator than the composite index. And finally, let's have a look at the current price of Bitcoin to see if there's any good trades to be made. We just broke out of this falling wedge. This is a bullish pattern. So we had the bullish cross here, where the 20 moving average is going uh, above the 50 moving average. We came up, and maybe we're going down here now to maybe get a bounce of the 20 moving average on the hourly. Let's see how we look on the 4 hours. Um, so there are two potential targets for this breakout. One is, of course, the the top of the wedge. I'm just gonna take it here. I'm not gonna drag this all the way up here because it doesn't really touch this point. Um, so yeah, I'm just gonna call it here and do like this. So that would take us to 60,000. Um, but people are also talking about this bull flag. I don't see it as a bull flag, but yeah, because they say maybe all the way from down here, and this become our bull flag, maybe up up until here, something like that, and that would probably take us all the way to 70,000. I don't think that's gonna happen. But yeah, would be cool if it did. Would be a lot of money to be made from this trade here now then. On the 4 hours, we are probably, no, maybe not yet, but we broke the 50 moving average, so we should maybe get a bullish cross on the 4 hourly as well pretty soon, maybe up here. So that would be tomorrow. And maybe we can break this line. If we break this prior top here, this one, then I'm very bullish. Because this is where the heavy resistance is. So if we can break this green line here at 57,200, then I think we're going for an all-time high, or at least retest the all-time high. So I think that is it for today. Next time I will talk about this chart that I'm making, which is a chart where we look at the price per earnings adjusted for interest rates to try to establish if stocks are cheap or expensive, and which kind of stocks that are giving the best value. So if you would like to see that, make sure you hit the subscribe button and the like and the bell notification and the whole 9 yards, and don't miss out on the next video. And I hope this has been helpful to everyone, and I'll see you back tomorrow. Bye for now.